We begin. A very good day to you all. Welcome to the Wall Street Blockchain Alliance's Environmental, Social, and Governance Working Group quarterly meeting. My name is Ron Quaranta, chair of the Wall Street Blockchain Alliance. It's a privilege to be here with you all today. A couple of housekeeping items before we begin. All attendees will be in listen-only mode. Any questions, please do submit in the Q&A section of the Zoom, and we will certainly address those questions at the end of each segment that we have. In addition, please do keep in mind that nothing discussed should be considered accounting, investment, legal, or tax advice. Adam's probably sick and tired of hearing my disclaimers at this point, but I want to start by saying hello to our special guest. We've really got a great segment, a panel discussion across the four of us on the intersection of between blockchain and ESG. I just want to give our guests an opportunity to say hello briefly before Adam and I kick it off. Paula, coming to us from Europe, please say hello. Tell us who you are and what you do.
Hi, everyone. Hi, Ron. Thanks for the intro and for the invite as well. So I'm Paula Palermo. I'm originally from Brazil, from São Paulo. I live now in Lake Como. Everyone, welcome to come and pass by. I'm an architect, urban planner, and economist by trade. I have more than 15 years with experience of working with impact-related projects, and also in venture capital. My previous experience was in plug and play and Techstars, working with smart cities ventures and corporate innovation as well, helping the Fortune 500 companies with their innovation challenges, and also bringing more opportunities to startups in the environments of mobility, sustainability, real estate, and also blockchain and fintech. So that's myself. Thanks, Ron.
Paula, thanks for joining us, always making us jealous by telling us you're headquartered now at Lake Como. Darren, let's go to you. Thank you for joining us. Tell us about yourself. Tell us about your firm.
Hey, everyone. Darren Wolfberg, co-founder, CEO of Triangle Systems. We are a digital finance platform, infrastructure, and climate compliance. My background, over 20 years in institutional finance, first at Morgan Stanley, on the trading desk, trading everything from technology to materials to industrials and utilities. Gave me a lot of exposure to both commodity and equity and debt markets. After that, recruited over to BNP Paribas, where I ran cash equities, program trading, electronic trading, and futures in the US. And really since then, those two worlds of institutional finance and a previous background in technology have blurred and have really informed what Triangle does and how we do it and why we're so excited about it.
Darren, thanks for joining. I remember in prep, I feel like you and I have chewed some of the same dirt over the past 30 years in financial markets. We're overdue for a catch-up. And then finally, Mr. Wasserman, please say hello to the group.
Oh, thank you. And please call me Adam. Mr. Wasserman, well, he would tell me it was Dr. Wasserman was my father, but I'm still just a Mr. I'm an attorney by training, hence the Mr. Spent several years, most recently, as the head of enforcement at the New York Stock Exchange, making sure that our markets remain safe and fair. And I am currently the executive director of Finpublica. And I want to thank you, Ron, for letting us join you and co-sponsor this event today. So some of your members might be asking, well, what is Finpublica? Finpublica is a nonprofit platform, and we work with current and emerging leaders from across the finance industry and around the world to help them develop and achieve their own environmental, social, and governance goals. And we're doing this really through a three-pronged approach. First, by providing and cultivating an engaged community. Two, providing extensive and easily accessible content. And then three, serving as a catalyst for action. On the community front, we opened membership in December of 2022. We currently have 250 members from about 20 different countries, from all parts of the financial services industry: banking, hedge funds, private equity, VC, insurance, broker-dealer, fintech, law, consulting, and more. On the content, we sponsor a number of events and discussions, such as today's. Recent things have included how to navigate pro and anti-ESG regulation, a fireside chat with the Department of Energy on clean energy, public-private partnerships, and the like. But more than that, we're also focused on creating an open source tool so that anybody can get up to speed on environmental, social governance issues really quickly without having to search all over the internet or read a 50-page treatise on the difference between the ISSB and the GRI. So just if we quickly show you what our website is, here's our website. You can find us at finpublica.org. You can find a whole number of different topics. So let's say you want to learn about ESG regulation, you can click on there, and then you can learn about it in the United States, the EU, the Asia Pacific, and more. If you're looking for sample policies and procedures, you can find those here in the general space, the equities, the debt, et cetera, and so forth. And then we also include research that tries to tie environmental, social, and governance issues to reducing risk and increasing alpha. Finally, if you're interested in learning more about the organization or joining it yourself, you can just click on membership or contact, and we'd be happy to have you. The last thing that we're focusing on is trying to serve as a catalyst for action. And what that really means is, in addition to having community and education for their own sake, what we really want to do is work with our members to help them come up with what are the ESG issues that they want to pursue. And we're putting together working groups of members to focus on collaborating on issues that are important to them. So in a nutshell, that is Finpublica.
Adam, thanks so much. Really appreciate it. I'm going to ask our guests, Darren and Paula, to step into the virtual green room. We will come back to you both. I know you both have amazing presentations coming up as well. But Adam, let's you and I kick off. And you and I had this concept of fireside chat. And let's dive into some of the questions that I know you and I have been seeing these questions and these issues for several years now. And I remember in the early days, we talked about crypto. Energy consumption certainly came up. So let's start there, because I think there's an entire series of misunderstandings about Bitcoin, by way of example, and misunderstandings about proof of work. But how did we get to this point? Look, what's the Bitcoin profile from an energy consumption perspective? And in the early days, it was, Ron, how can you support Bitcoin? It uses more electricity than Norway, for example. And I think that dialogue has changed as well. What's the background of that from an environmental perspective?
Right. Well, let's take a look at the background. Traditionally, I mean, as you know, Bitcoin requires proof of work, which requires thousands or millions of computers spending millions of hours cracking really difficult code, which is very energy intensive. And I think there, at least traditionally, has been criticism of Bitcoin from an environmental standpoint. So if you take a look, there was a 2021 World Economic Forum study, and I think that's the one where they said that Bitcoin consumes more energy than Norway, Bangladesh, and Switzerland. It consumes 10 times the energy of Google, 25 times the energy of Facebook. And then even as recently as 2022, there were studies taking a look at Bitcoin between 2016 over the past 5 years to 2021, and they were critical as well. They were talking about how the per coin damage from Bitcoin was increasing rather than decreasing as the industry matures. They talked about that during at least certain time periods, Bitcoin climate damage actually exceeds the price of each coin created. And they basically said that on average, each dollar in market value created was responsible for about 35 cents of global climate harm, which is, as the share of the market value, is in the range between beef production on one hand and crude oil burned on the other. And it is an order of magnitude than wind and solar. So those are at least the traditional criticisms, but I think, as you alluded to, there's, I think, additional information that's coming to light.
And Adam, on that point, let's dive into the additional information. And I've seen this trajectory. I've been in this space since 2013 or so. You've been in for a long time as well. When we talk about the shift in dynamics, one of the early things that happened, and I think it was back in 2019, certain jurisdictions, certain nations banned crypto, banned mining, and there really what seemed to be this exodus to renewable energy sources for mining. So we had read the articles about Bitcoin mining, and I'm going a little bit off script here, Adam, but I'd love your perspectives on it. Think geothermal in Iceland, think solar in Texas, for example, and on and on and on. Has that shift truly happened, and has that changed the profile of proof of work as a net negative for the environment?
Well, at the end of the day, I think that progress is being made. According to a recent Bloomberg report, more than 50% of Bitcoin's power mix comes from renewable energy. So that, I think, is certainly a positive development. Does it completely mitigate the difficulties associated with proof of work? No, obviously that's always going to be a higher energy consumption, especially when you compare it to something like proof of stake, which I think is far, far, far lower. But you're seeing progress with 50% coming from renewables. But in addition to that, there are other ways that Bitcoin, for example, has been cited as being able to help the energy environment. So according to recent KPMG reports, if you take a look at Bitcoin, one of the things that it can do is it can tap into stranded energy. And stranded energy is the energy that's generated by hydro, wind, geo, solar, which basically occurs when few people actually need it. So one of the things that's fantastic about Bitcoin is because you can mine at any time, it is utilized to tap into those stranded resources. Something else that Bitcoin can be utilized for is to help stabilize the power grid. It can soak up excess energy when needed in order to prevent the grids from overflowing, and then you can shut it off when demand gets too high. And then also, you've seen Bitcoin being used in a number of other creative ways to, for example, help reduce methane, where companies are capturing the vented methane on the landfills, they're turning it into electricity, and they're using it to mine Bitcoin. And then if you move beyond the Bitcoin, you have more and more coins that are relying on proof of stake, which can, like you said, cut energy consumption more than 99% compared to proof of work.
Adam, thanks. And for everyone in the audience, again, thank you for joining us on the webinar. If you do have questions for Adam or myself or any of our panelists, please do submit them in the Q&A. Adam, I want to push that thread a little bit because you had said something that was really interesting to me. We talked about moderating or stabilizing power grids, and your description went one way, right? Soak up extra energy being consumed. I want to make sure I'm clear because I'm not an energy expert by any means. Does this also mean stabilizing it in the other direction? When you've got rolling blackouts in California or some jurisdiction, for example, is this similar? Is that the same side of that stabilization equation?
I'd say it's the opposite side. So what it is when you have rolling blackouts and the like, you can then easily turn off the Bitcoin mining in order to try to reduce the demand on the grid. So what you have on one side is when there's too much energy flowing through the grid, and I'm not going to pretend to be a electricity expert, but Bitcoin can be used to soak it up. But then when you are utilizing too much energy and the demand is too high, you can shut it off. So it can really help on both ends.
Right. You know, Adam, it's interesting that you raise it in that context because, you know, in our prep and in the conversations that we've had, when we talk about Bitcoin and proof of work, we're talking about the energy complex, we're talking about climate change and climate impact, but ESG is S&G as well, right? Is there an intersection for things like Bitcoin or other kind of crypto capabilities and blockchain-based capabilities that focus on the social or governance front? What are your thoughts about that?
Oh, I think there are huge opportunities there. If you take a look at the social side of the ledger, the UN World Food Program, which is the largest humanitarian agency delivering cash out of the UN, has used blockchain in order to get money to people who need it most. They've demonstrated this through pilot programs in Pakistan and in refugee camps in Jordan, and it is a safe and easy way to transfer money. It's also a lot less expensive. So it can replace, for example, Western Union or MoneyGram to get payments to people in developing countries. And not only can that be used to reduce their cost, but oftentimes to go to a Western Union required a 4 or 5 hour walk. And this is something that can be done immediately. Bitcoin, as we know, or crypto, as we know, has also been used to raise funds for the Ukraine and to help their efforts there. So I think there are a number of really terrific use cases there. And then from the governance side, the UN has pointed out that it can be fantastic from a governance standpoint. It promotes transparency, and both the transparency and the immutability on the chain can help reduce fraud. And I think you're going to hear a lot of examples from Paula and Darren on ways that the chain in general can be helpful, not only on the environmental side, but also social and governance.
Adam, and it's interesting. There is the crypto, which requires blockchain for the most part. There's also blockchain, not crypto. So a lot of what you're alluding to really lines up with many of the conversations that we've had. You referenced the UN food program. We've seen this for digital identity, refugee aid. We've seen this even in the tracking of organic food. I saw a statistic that's probably outdated, probably a couple of years ago, that globally 80% of the food labeled as organic is not organic, or not, at least not fully organic. And can blockchain potentially be a solution? We're even seeing leveraging of blockchain, and I'd love your input on this, for things like reforestation, for example, and leveraging IoT to track reforestation in different domains. How hard is that to do? And again, I'm definitely going off script, but do you see opportunity there as well?
Yeah, I mean, I think the opportunity is just continuing to grow. I mean, especially with IoT, and you're able to put sensors on the sources, and you can put them in areas where you're not likely going to be able to have the human beings, and you can have the content basically being taken up, put on chain, and then easily delivered to other folks who can use it either in a proprietary or sometimes even in a open source function. And I mean, another area where I think you're really seeing blockchain used is in, as you alluded to, is in the supply chain. So, for example, companies like Ford and IBM are using blockchain to track the sourcing of cobalt for their batteries to try to make sure that it's sourced responsibly and sustainably. I'm not sure if folks on the line watched John Oliver. He had an entire piece this week on chocolate and the use of child labor by companies who source cocoa. Well, Nestle and other providers are implementing the technology in order to improve the traceability of the supply chain and to track the sourcing of palm, cocoa, and other raw materials to try to better ensure, maybe not completely ensure, but to better ensure that they're being produced sustainably without harm to in the environment or other communities. So I think that is just one way that you're seeing it used on the supply chain, but it's also been used creatively in tools to eliminate illegal fishing in the tuna industry that was developed for the Worldwide Fund for Nature. The World Bank is trialing the use of Bitcoin to enhance emissions and the trading of carbon offsets. A company like Carbon X is a platform that's trying to take reductions in GHG and return it into cryptocurrency. And so I think you're really going to hear from Darren and from Paula about ways that both the chain and crypto can be used in a socially and environmentally responsible manner.
Adam, thanks so much. One last question, then I want to bring Paula to start back to our virtual stage. What do you think are the challenge or pain points for wider adoption? And the reason I ask that is we've been having this blockchain conversation for several years. Conceptually great, as with all really important endeavors, implementation always a bit harder. In your mind, what are one of the two biggest challenges for adoption?
I still, and this comes from my background in securities regulation, working at the New York Stock Exchange, but I still think there is some challenges when it comes to regulating Bitcoin. and regulating crypto. And you also have challenges when it comes to regulating ESG, and you put the two together, and the challenges might be even bigger. I think right now there's still a little bit of confusion as to how crypto should be regulated, how blockchain should be regulated. Is it something that the SEC is going to take control of? Is it something the CFTC is going to take control of? Is it going to be both? And then when you have events like the collapse of FTX, that's something that I think can be a challenge, in that it, I think, scares people off from the credibility of it as a marketplace. So I think one of the things that I'm hoping to see is that additional regulation in the space mature, there be additional clarity, but there also be additional cooperation by players in the industry who recognize that regulation isn't just a negative, it's something that is going to be really important to widespread adoption.
Adam, it's a really good point. ESG, a very broad series of very critical topics. So there's a lot of work still to do here. Adam, thanks for the time. For those of you who are still in the audience with us, and those of you who are just joining us, please do submit your questions in the Q&A. I'm going to respectfully ask Adam to step into the virtual green room and ask Paula to join us if she could. Would love to hear what's going on with Simbiotica. Paula, please don't make me jealous again by telling me about Lake Como. I'm not there. I'm in New Jersey. But would love to have your presentation on the work you're doing with Simbiotica. Would love to talk to you about that. We'll have questions from the audience coming through Q&A, and with your permission, we'll reserve some time at the end, both for the audience questions, and I certainly have questions I want to talk to you about.
Sure. Thanks, Ron. And don't worry, it's rainy today, so you can be okay in New Jersey. And it's so great to actually step in after this whole conversation, because myself and also Darren, we are bringing a lot of the discussions that you guys started. I will start by sharing my screen. Let's just put this in present mode. So let's talk a bit about Simbiotica. And I forgot actually to add this to my introduction. So let's see. I'm Paula, so I briefly introduced myself, but it's great to step in the discussion of how, we can bring real world things to the digital world of finance, right? And after your discussion about Bitcoin mining, this was actually one of the ways that I actually stepped into crypto, discovering how we could use the facilities for Bitcoin mining for regenerative sources of energy to produce other things. So we produced a first paper for an Ukrainian urban planning school discussing those topics, and we found a lot of nice initiatives already, such as cryptomatoes that people were using the external heat from the machines actually to grow hydroponics, and many other solutions as the methane recycling, as we just heard, and many others. So Bitcoin mining space is indeed one starting point, but now the crypto space also evolved a lot beyond Bitcoin into new assets, and this is something that we'll be discussing now. So this again is not investment advice. This is just for us to give a sense of what is happening in this market. And yeah, that's myself. We already spoke about this, about me. And I'm bringing here some numbers about ESG markets. So ESG and crypto, they are actually two undeniable trends. We have a lot of data here that we can discuss, but this intersection is not so clear from the beginning. So first, from all these discussions about electricity consumptions and etc., but also about two markets that are not super connected. But we have here that together the Web3 and ESG markets, they sum more than 150 trillion US dollars, and also the exchange traded sustainable assets investment markets, they are also undeniable, right? So $32 trillion. And impact only cryptocurrencies, they are around $20 to $26 billion as well, as we're going to see from our data. So this is the way that we start. And here we also started Simbiotica mapping this market. So among all the cryptocurrencies, what is actually the sense that we have today? So among the cryptocurrencies that we have, we created this taxonomy based on the impact-related cryptocurrencies and started mapping those tokens that are actually, they want to promote good for the planet, for people, for society. So we break down into technology, health and design, energy, finance, carbon, nature, social, circular economy. And then we started to see how actually those markets are moving and growing. I'm showing more for you live very soon. And the problem that we started facing is that the absence of data and the standardization of those assets make very hard for us to disclose the real impact and how actually this work is possibly valuable, right? So people first start saying, okay, cryptocurrencies are bad, I'm afraid of this market, but we can see that this is already a lot going on and we need to understand. And first of all, we found, Darren is going to bring a very nice solution that Triangle is working now, but we found, okay, digital assets, blockchain, everything is registered, and then we can have a very good instrument actually to make those ESG related assets work into life, right? But how we wanted to approach this market. So first of all, we face it as individual investors and also entrepreneurs in this world, that it's very hard to find the assets, not only in crypto, but they have the assets that in general that have positive impact for us to invest. So how we can have, the alpha, but also positive impact was a great question. And only among the 22,000 cryptocurrencies, how could we find something that is not a dog-based coin that is there just for memes, or how we could find real impact, right, in those currencies and assets. And it's also, the second point, it's very hard to trust those currencies because also not only the crypto world, but the traditional ESG world, there is a lot of greenwashing. And if you're trying to find for high-ranked ESG companies, they are actually the companies that are causing more harm, right? And then how we can actually find the companies that are promoting real impact, and right now they are overlooked. So this is something also that we started to think about. And also cryptocurrency, the market itself is full of scams. So how we can navigate securely into this new emerging market. And the third point is that it's very hard to disclose as well. So we have a lot of, standards everywhere. And now also like climate change is one of the most important topics listed, not only by practitioners, but right now for finance people as well. How we're going to work with the disclosure and portfolios that are coming from regulations and how we can make this work. So the very growing sophistication in ESG management and measurement is also a problem that we can find some solutions in crypto. So that's why we came with our platform. So how we solve those problems? First, define problem. We have an impact market platform. So we started to list those currencies that actually have real impact and started to understand how actually this real impact is going through the Simbiotica crypto positive impact analysis system. So we created a framework to actually analyze the ESG factors of those currencies. And also the disclosure is part of it as well. So this disclosure solution is also possible after if you have a portfolio based on those types of assets. And what we do, so first of all, we scale the impact with Web3. So the stack to onboard on impact companies into Web3. And helping those companies actually with sustainable and operative business model to scale the operation and join into Web3. And also we measure the impact with Web3. So we use Web3 to first scale and also to launch through the impact rating platforms that I'm going to show for you right now. So scaling the impact with Web3, how we do that, we first see operative business model, and then we onboard them into Web3 stack. So adding the pieces that Web3 technologies are promoting us. So blockchain, smart contracts, payment rails, analytics, communities, and etc. And then we can have assets that are digital, but also impactful. And some of the use case that we are working right now, it's, for example, one electronic waste recycling certificate completely on-chain. So that's how we approach the scaling part. And then to measure the impact of those currencies, how we do, we have a first framework, which was developed together with Climate Collective, and I'm from Cello, that we have those three pillars that it's what we call the ESG on our world. So first of all, impact, it's assessing the impact of the projects and cryptocurrencies. How are they actually promoting impact? Are they registering there? We have also carbon mitigation aspect of this, those currencies, how we can look for the consumption of energy of those currencies, right, or those assets. Then the governance, how we can understand like what are the aspects or ESG of governance inside cryptocurrencies, because cryptocurrencies, they bring blockchain as one facilitation for governance as well. This is one of the main aspects. Hi, Ron.
Paula, I'm sorry, let me interject. Some folks in the audience had mentioned it looks like your slide is cut off on the right-hand side. I see that as well. Is there a way to fix that?
Yeah, we can do it this way.
There you go.
Perfect.
We don't want to miss anything, Paula.
Okay, so sorry. So yeah, we missed it a bit, I think, but yeah, now we can see everything. Thanks for the note. And so I was in governance. So blockchain brings this big promise of being decentralized, governance everywhere. So we want also to check what are the maturity of the smart contracts, the actual governance and voting structure that those projects have, the background of the team. So how we can promote this as a due diligence mechanism as well. And also, for example, one thing that is very interesting is we started to see the Gini coefficient from the wallets and how concentrated they are, because this is also one aspect of risk, right? We saw what happened with FTX, and we don't want this to happen with all companies and assets and all the crypto world again. And then the cybersecurity part, which is also very important. So part of the assets, how they are structured, are there ways that can actually bring us cyber risks? For example, is there a way in the code that you can actually rug pull all the assets that are there in this wallet? So a lot of discussions also come into cybersecurity. So this is the initial framework that we use it. And with this framework, to clarify, we can first launch assets that are impactful, but also see the impact of other assets as well. In our progress so far, so we got grants from Cello Foundation, from Climate Collective, and from Filecoin Foundation as well to develop our platform or framework and this first electronic waste certificate. Also, we got a first investment from Amaz, which is the first fund in Brazil focusing only on the Amazon and all the bioeconomy possibilities that we have to scale there with digital economy and all those aspects that we are talking right now. And also we already have some revenues from projects that we've been launching. And we already tested the ratings that I will show for you right now as well. And here's our ecosystem. We got finalists into one very interesting competition from US Department of State called Tech for Democracy, where we showcase the index as an open index. And then we were there with also other Web3 companies promoting technology for good and also for more democracy. And this is the partners that we've been working on right now. And also we got featured in many other portals as well. So that's our mission. I think I just wanted to bring some more food for discussion here. And you can also reach out for me if you have any questions. But just to finish the presentation here with our website, I think it brings more clarity for what we are doing right now. So we started saying, okay, how can I find in one place information about the impact cryptocurrencies that exist? And we could not find that. So the first thing that you can check here is the overall market cap of impact-related cryptocurrencies that we calculate around 18 billion USD right now at this moment. This is live, and which represents 1.42% of the whole cryptocurrency market. So this is, you can see that it's still very correlated with the crypto market that have real value as well. So we have a database of around 500 institutions, from which of those we have tracking here of 239 tokens in this website, in this specific index. And here you can see again the market cap by sector that I mentioned before. So you can see by each side of application, how actually money is moving. So surprisingly, we can see that carbon is not super representative here, but also a lot of questions in the VCS space, but energy is very strong and technology for good as well, and also health in this side. And here you can see also more information about those specific currencies. And if you click, you can see already some results of the ratings that we have right here. This is also to orientate investors on how actually those currencies are promoting good. And if you click, you can see more information about those currencies as well. So this is actually one of the first possibilities for us to work with with this specific market and how it is evolving. I will stop here, Rom, and then I think we can give the mic to Darren, which is also working in a very interesting way.
Absolutely. Before we do that, I did want to reserve some time for questions to you, Paula, and obviously for everyone in the audience. Please submit your questions in the Q&A. One thing real quickly, for those who may not know in the audience, Paula, Gini coefficient, can you describe what that is real quick?
Yes, sure. So Gini coefficient actually see the concentration of income from countries. So if you see, we have like, we can see what is this aspect from like real countries, right? So we are bringing this calculation into cryptocurrencies as well.
Got it. Paula, and for one of the things, and you and I had this conversation when we first met, and there's a lot to capture there, and I think you're doing great work. One of the conversations we had was on standardization of data and subjectivity. It occurs to me, and in the research that we've done and the conversations we've had, there's a lot of challenges around the standardization of data. There is some level of subjectivity to some of the indice work and some of the profiling that you're doing of organizations. How do you respond to that? Is it a concern? Does it become less subjective over time? What's your perspectives on that?
Yeah, I think this is a very good question, Ron. Thanks for asking. We started to try to navigate in this market in the ways that we could correlate information across the market, right? So as investors, we need to have a standardized information to compare them. So what about this new market that is emerging? And right now it's a bit complicated. So also the efforts that we have in seeing the real impact of those currencies, assessing this information, it's very challenging because we don't have standards. But the good thing is that we have smart contracts, which are per se one type of standard, right? So we already have one instrument that we can start using. And right now we are seeing a lot of evolvements in the disclosure space that also can bring to those smart contracts more structured to actually bring the important information to this ledger or to this smart contract that we can check information. So this is a big bet that we have, that this will also facilitate our work and also bring more information to investors for them to make conscious decisions on where the money is flowing. So this is it's already evolving, but this is already a beginning of a work on how we can bring standards to on-chain infrastructure such as smart contracts, right? Because this will be in the end the transversal structure that the market is adopting right now. So how we can bring the disclosure frameworks for the disclosures of when you have those assets in your portfolio, for example, which right now you don't necessarily can do only with smart contracts.
Paula, thanks so much. We do have a question from the audience. There is so much debate in the carbon credit markets. For example, Vera banning tokenization. What are your thoughts about the future of carbon markets? I read an article, interestingly, the other day that basically said it's not going anywhere. It's not going to go anywhere. I personally disagree, but would love your perspective, and I think the audience wants to know as well.
Yeah, I think so I've been working with sustainability and impact for a while, and I think carbon markets, it's our first hope. Because if carbon markets do not work well, what we are going to do with the other instruments that are emerging, right? So we see a lot of hype now with biodiversity credits, with other format of credits, but how we can emerge those discussions if one of the main instruments that is already available is not even mature. So I think this is a debate for us, of course, to have here on how we can make actually sustainable finance instruments viable. And carbon markets was the first attempt to actually bring this to scale. So I see a lot of problems with that. Also coming from Brazil, I see the avoided deforestation questions or additionality, like we cannot have more carbon from old forests, right? I mean, how are the communities working there? And those are questions which are very important. But I think right now, it's very important also for us to consolidate carbon markets in a way that it works well, so we can use other instruments. Because if carbon markets right now, they just don't exist anymore, how we can make progress with the other standards, how we can make progress with other sustainable finance instruments, I think will be very hard. Also because people working with sustainability, we are in the forefront of a lot of people that do not believe in this type of markets, right? So we need to make it happen.
And so much of it is tied to education and making people globally, worldwide, understand what's being built, what the mitigations are, and the work you're trying to accomplish. Paula, you're doing such great work. I really look forward to having future conversations. Want to know more about Simbiotica and where this stuff is going as well. Thank you for your time. I'm going to ask you to go back to the virtual green room. I'm going to ask Darren to join us as well. I know he's got a great presentation. Mr. Wolfberg, good to see you, sir.
Good to see you, Ron. How's everything?
Another day in paradise, my friend. I know we've got some questions coming in and we'll address some of those later on, but Darren, I wanted to give you the stage. Please bring your presentation up. We'll get through questions. For everyone in the audience, again, please do submit questions throughout. If we don't address your questions within a specific segment, Darren, Paula, Adam, and I will address them at the end as well. But Darren, I'm going to shut up and give you the floor.
I appreciate that, Ron. And I would actually like a shot at that question as well on tokenization and carbon credits. So thanks, everyone. I am a co-founder CEO of Triangle. At Triangle, we triangulate climate data with finance. And back in COP26, where we presented, the head of ESG for Allianz made this comment, and I think the simplicity of it is so true and important. Not until climate and finance can speak the same language will there be a solution to the climate problem. And really what I take away from that, having 20 years of institutional finance background, is the unleashing of capital markets, the unleashing of banks and lending into this market. And really one of the biggest problems is that to do climate right, you have to get dirty with the data. And to get dirty with the data, you have to link data to assets. But just to kind of recap some of the things that are going on in the world today. So you have Delta, they're being sued for $1 billion for greenwashing. And again, I think what that is going to drive is the relationship between audit and financial audit and accounting audit, as well as carbon accounting and carbon audit. California recently passed their rules on TCFD. The ISSB adopted TCFD. Australia adopted TCFD. And the FDIC last week announced climate disclosure for banks under TCFD. And so what is TCFD? Scope 1, Scope 2, Scope 3. Much of the problem, as I mentioned, about climate, it's not just a big problem, but it's a big data problem. And really what we do when we think about the big data problem is we double click into the technical aspects of what that means. So when we think about TCFD, it's the movement and aggregation of data across an asset ecosystem. You then run your carbon ledger. And then the complicated aspect is the movement of that data to all of the stakeholders upstream and downstream. And in a Web 2 world, we use an API to move information from database to database. In this instance, we need to move information from one database to many databases simultaneously and receive information from many databases into one. And one of the things that you'll probably hear us say is you can't solve Scope 3 without Web 3. And that's one of the key things that we have solved. So just to talk about the TCFD market real quick, $115 trillion of assets under management by asset managers now have this compliance. $87 trillion of commercial lending globally now has this compliance. Today, we're at a $3 trillion greenwash road on our way to $50 trillion by 2025. And a lot of this has been driven by the success of the sustainability-linked bond market, growing from $50 billion in 2018 to north of $3 trillion at the end of last year. So the product that we've created for this market is a combination of a three-part kit based on our underlying chassis. And that is greenhouse gas reporting, or TCFD reporting, IoT and data reporting from sensors out in the field, sustainability-linked underwriting platform, as well as a carbon credit / REC minting platform. And ultimately, all of this together, we believe, creates a $200 trillion climate resilient economy where you have people rotating out of brown debt and into sustainable debt, and the creation of new assets, $4 trillion annually of new asset development that needs to go into market. And ultimately, you're going to get to your compliance with new infrastructure or synthetically with carbon credits. The carbon credit market, in our mind, is inevitable. There are 4 key things here that are driving this market. First, TCFD compliance. Second, the sustainability-linked bond market, where today they see a 74 basis point benefit for compliance. In the SEC rules, they talk about the cost benefit. Well, the cost is for compliance ranges in the few $100,000 range. In fact, it's probably a little bit less than the annual Christmas party, versus the benefit of potentially 74 basis points on the debt of the entity. We have one client that we're working with $10 billion of debt, $74 million of benefit, which is much better than the cost of the Christmas party. Fines, you have local law 97 here in New York City, $268 per ton for every ton that you're above your threshold. We did just become the first approved greenhouse gas monitoring and reporting tool for local law 97 under the New York City Accelerator Program. And lastly, not on this page, is CBAM, Carbon Border Adjustment Mechanism, new rule that's rolling out in Europe where every product that is imported into the EU needs to be normalized from a carbon footprint perspective, creating demand. But long story short, 37 gigatons of carbon last year. At the EU allowance market, you're looking at a $3 trillion market. At the local law 97 penalty price of $268, you're looking at a $10 trillion market. That's before you add speculation, securities lending, or leverage. So to date, we have 4 different segments that we're currently operating in. The first is banking. We're working with 2 banks. One is the largest community ag bank in the US. The second is a farm credit bank. Collectively, $50 billion in deposits, $34 billion in loan book, delivering our 3-part kit of TCFD climate compliance, sustainability-linked underwriting platform, and carbon credit minting platform. On the carbon credit side, recently the SEC came out enforcing NFTs as unregistered securities. Essentially what that means is they've defined them as financial assets, which means you need to be a broker-dealer in order to effect a trade in that market. And because we are a broker-dealer permitted to issue and sell digital assets, we've received a lot of inbound from different DMRV, digital measurement, reporting, and verification solutions for soil carbon sequestration, for methane capture, for oil and gas wells, forestry, woodland reserve, and for dairy. On the capital market side, we're active with the Ministry of Finance for Bermuda to convert $500 million of their $3.5 billion of sovereign debt to sustainability linked. And we're also working with a large public utility, again, $10 billion in debt, looking to convert that debt to sustainability linked. And then on the asset management side, we're working with a few different asset managers ranging in scale, helping them aggregate their TCFD compliance information. So at the heart of our platform is really a big data platform. It's a managed platform that links big data with financial assets. And we do that using blockchain. So think of yourself in a factory, 2 conveyor belts of information. One conveyor belt is asset information. Is it a loan? Is it a property? Is it a manufacturing plant? Is it a fleet of vehicles? And then the second is your billing information or IoT sensor information. Both of them come together here in our asset factory, and we create a digital ID for every asset. With that digital ID, we're able to deliver a market data feed of economic, operating, climate, and insurance information. And whether a portfolio is 5 assets, 5,000 assets, or 5 million assets, again, our experience in program trading allows each row to come in independently. However, you're able to aggregate the data across the entire portfolio. We filed patents on this process, linking big data sources like billing and IoT sensor information to blockchain back in April of 2020 after a partnership with the University of Michigan. And what this delivers is data verifiability, operational simplicity, reduced cost of borrowing, and is more logarithmically more cost-effective and scalable than APIs. So here you can see what our kit looks like for TCFD SaaS compliance. Again, it's a no-code format in order to aggregate your data, add your bills, add your vendors, and add that across your ecosystem. From the sustainability-linked lending platform, again, whether it's one asset or a portfolio of assets, the data flows back into the bank, into the loan book for economic performance, for climate disclosure purposes. And here we can zoom in and see what that looks like with solar production data, revenue or cost savings data, carbon footprint associated with that, what's the carbon value and the net economic value from this activity, and ultimately linking that to the carbon credit ecosystem, where again, as I mentioned, soil carbon sequestration, woodland reserve, methane capture, essentially we create fungible carbon credits in a world that is currently using NFTs in order to execute trades. And we frankly just think it's an oxymoron to have a NFT as a financial instrument when financial instruments are fungible assets. Anyway, all of this data comes together and really creates a Scope 3 superpower where every reporting entity has a digital ID. Every recipient has a wallet. If you receive the digital ID, you are permissioned to receive that information. This works great for direct data stakeholders or indirect data stakeholders, and we're excited to see where this goes. We also believe that this improves the administrative cost associated with assets. Again, blockchain provides a lot of value there, whether that's for carbon credit minting, for digital asset reporting, Scope 2 verification, or for research purposes. We think that the digital ID is really a routing tool more than anything else. As I mentioned, we became one of the first broker-dealers globally permitted to issue and sell digital assets. And with that, let me pause there and we can go into the Q&A section, Ron.
Darren, thanks so much. There's so much to unpack there. I know we've got some Q&A questions coming up from the audience as well. Darren, I want to push back on a couple of things if I could. And you and I had this conversation, and I'm with you. I understand fully the fungible versus non-fungible aspects, but I want to push on that a little bit. And just in some conversations that I've had, from a financial instruments perspective, fungibility is a prerequisite. But when we're talking about things like emissions reductions credits or proof of emissions reductions, you can understand the concept of non-fungibility being applicable there. And the reason I'm bringing that up is it brings me back to Kyoto, for example, when someone in Eastern Europe can print up an ERC and sell it and print 15 different versions of the same credit reduction. Am I misunderstanding that? Tell me your perspectives on that.
So that's actually a phenomenal question and how you delineate it. So we see two aspects to this world. One is the reporting aspect, okay? Like TCFD, the same way when a company files their reporting for their quarterly earnings, that is not a fungible asset. That is simply a disclosure to the market.
Right.
TCFD is very much about financial disclosure, okay? However, the units that go into that disclosure, which have value, which are financial instruments like carbon credits, are very much of value. So from that perspective, we distinguish between the reporting and the vessel for reporting and the vessel of value that impacts that reporting. Does that make sense?
That makes total sense. I know it's often a bone of contention for folks who are just starting to learn about the ecosystem of what I call climate finance very broadly. So I'm grateful for the delineation. We do have a couple of questions in Q&A. Brittany, Vera did not ban the tokenization of credits. I think this is probably from a prior panel. They stopped the tokenization and therefore resale of credits that have already been retired. Brittany, thank you so much for the clarification. I really do appreciate it. Question for you, I believe here, Darren, given the carbon credits are quite different, vintage, source, really good point. How can you use an FTS? The value will also be different depending on these attributes. Darren, you want to try to take that?
Yeah. So the way I think about that is, if you look at the stock market, there are thousands of different stock symbols. Those stock symbols can be on the OTC market. They can be on the listed market. Every one of those stock symbols has a company description, a corporate profile, all of those attributes. Fungible tokens are the same thing. It's basically just a legal representation of tender through financial markets. And one of the key things that you see in carbon credit markets today, and where, as someone who has a Series 24, 79, 55, 63, 7. I have too many numbers, okay? Where essentially those assets, you need to do AML KYC on that. You're transacting dollars. And, as the Wall Street Blockchain Association, inherent in that is there's a lot of Wall Street participants who are all very familiar with these requirements. And I think the free pass that's kind of gone into the carbon credit market, again, this cottage industry that is now getting ready for the prime time, we need those prime time rails. So therefore, we can transact these at scale. The comment with regard to tokenization and carbon credits, I almost equate that to how when I saw the transition of stocks that are traded in fractions to decimals, to electronic trading, to high frequency trading, We're at those same kind of hops that are going on right now. And I'll tell you this, the adoption rate of electronic markets blew the brokers away because they weren't prepared for this. I've seen this rodeo before. The market is an exceptionally efficient mechanism for pricing risk and movement of capital. And if there's an opportunity to make money doing this, again, it's linking climate with finance to solve the climate problem. That's the core problem.
Darren, you and I, we remember we were back there when I had folks on the floor of the New York Stock Exchange telling me paper tickets aren't going away. So really good point, Darren. Thank you so much. Cameron asked a question I thought was a really great question. It kind of went to my next point. Will you incorporate International Sustainability Standard Board's S1 general requirements for disclosure of sustainability-related financial information and S2, the climate-related disclosures?
Yeah, I mean, those are the compliance requirements. And that's, you know, as someone who is a registered person, you follow the rules that are set out. You don't create your own rules. So from that standpoint, we have every intention of following not only what it means from an ISSB perspective, what it means for from a carbon credit or reporting perspective there. We currently participate in 3 different working groups. One is the Interworks Alliance on Carbon Emissions Tokens for the reporting of carbon emissions. And then 2 other working groups. One is the World Economic Forum on carbon credit creation and transaction, as well as the Interwork Alliance group on the voluntary carbon market.
Darren, thanks. Last question I've got, and then we'll call Adam and certainly Paula back to the stage as well. You referenced some of the regulatory requirements out there. You touched a bit on the SEC compliance reporting, climate reporting requirements. One of the things that the SEC often says is, well, we're only putting forward requirements because most of these companies are already doing this reporting. The other side of that is, this is so expensive. Why are you doing this to us? Are there validities to both sides of that conversation?
So I think that there's a couple different ways to look at that. One is, does the SEC want a seat at the table? Do they want to inform what that should look like? When you look at securities regulation for the issuance, they're very involved because, and frankly, the rest of the world follows the SEC for the issuance and the raising of money. This is a very important topic. I would be surprised if the SEC wants to defer the management and regulation of that to every other jurisdiction in the world. The other key thing is the SEC is a center point for regulation across the globe. And because it's a center point of regulation across the globe, again, people look to the SEC. So if the SEC sets rules, it becomes a standard body for everyone to follow, reducing costs of that administration. Your second question was with regard, remind me what it was?
I think the chair has mentioned, and the SEC repeatedly mentioned, that most of the companies that would have these requirements are already doing this reporting anyway. For those who may not understand the industry, is that true in great measure, or is there a gap there that needs to be overcome for these companies?
So there is, and I feel comfortable saying this because I've seen recent data along these lines. A lot of the larger publicly traded companies have a good handle on scope 1 and scope 2.
Right.
That being said, a lot of them are using estimations as part of their math, as opposed to actuals, which could withstand an audit. We see that transition happening on the back of the Delta Airlines lawsuit. And frankly, as a result of that, you have the recent green hushing trend that has been going on. But we think that scope 3 is really where the devil's in the details and where you're going to see change and behavior change by people. If you don't see scope 3, then you're not going to see behavior change. That said, the regulations are very much calling for scope 3. California includes scope 3. The EU includes scope 3. And we only think it's a matter of time that those folks really get their house in order. And we're excited about that because that's actually where we differentiate ourselves from other participants in the market.
Darren, thanks so much. Like every good webinar, we're going a bit over. I want to call Adam and Paula back to the virtual stage with us for last closing comments or questions. I think we have no more questions from the audience, but Adam, Paula, Darren, it's always a pleasure. Any last comments, Adam, you want to make? Well, you're on mute, so it's really hard to hear those comments.
No, thank you. So I think one of the things that just really excites me about this conversation is you really have two things that are the wave of the future. You have ESG, environmental, social, and governance, or sustainable finance, or whatever you decide to call it. That's not going away. And that is going to be, I think, more and more important to companies, to investors, to firms as we continue marching forward and as the millennials and Gen Zs become more and more involved in our markets. The same is true for blockchain and crypto. So what you really have here is a situation, it reminds me, I don't want to show my age, but those old Reese's peanut butter cupped commercials where you have chocolate and peanut butter coming together to create something that tastes really great. And I think there is that same opportunity when it comes to ESG and blockchain. So again, thanks for inviting me here today.
Adam, thanks so much. Paula, before you get back on the yacht at Lake Como, tell us your final thoughts, please.
Yeah, I really enjoy actually your discussion with Darren. I was here just listening and seeing, first of all, from all the experience that you guys have in financial markets in US. Also, Adama, you put in this group. But I get really excited as well because we talk a lot about SEC. The market moves a lot with SEC, but also we can look to other geographies and perspectives. So right now, Brazil, it's very advanced. We are participating in working groups with the Brazilian SEC and the central bank. So the regulators, we even said, guys, please, we need regulations. And they said, oh my God, what are you asking for regulations? And we said, yes, we need frameworks, please, because everyone is trying to build things, is trying to innovate, but we always face walls and doors, right? So how the regulators and those bodies, they can actually innovate together with us, because we need that from a safety perspective, from innovation perspective, and also to bring, to close the finance gap for the things that matter most for the world, right? Sustainability, our environmental assets, and our lives as humanity. And from this point of view, Brazil right now is adopting a very interesting legal framework for the Brazilian central bank currency. So we have this framework, we have already a working prototype for that. And now the moment is of doing tests with how you can create assets on top of this Brazilian central bank digital currency, how we can actually create new assets, and how we can do reporting as well. So Brazil also just approved the Brazilian SEC that ESG reporting will be mandatory for 2026. So this is another win. So I invite you all to come to Brazil with me so we can also explore very interesting things there and make those instruments to be, scalable, to be feasible, and for us to have a financial world which is more inclusive, which is more sustainable. That is the only thing I think we'll be thriving as humanity. So that's all from my side.
Paula, thanks so much. Keep up the great work. Darren, now that Paula's called all of the rest of our panelists old, why don't you round us out? Is climate finance the next evolution of global financial markets? What do you see coming?
Yeah, no, I see three markets in transition right now: the traditional market to the digital finance market, the ESG market to TCFD, and carbon credits in kind of its immature state to a much more institutional mature state. And I'm excited that Triangle's at the center of those three trends that are currently going on. We do think that climate will be the first institutional adoption of institutional finance using Web3, because you can't do it without Web3. You have to link the data to assets to provide confidence to people. And if you don't do that, you won't have confidence. Being a market practitioner for many years, transparency creates confidence. There's a reason why every trade that you do, you get a confirm, because of transparency provides confidence of settlement. It's as simple as that. So we're excited for what's in front of us. And if anyone has any questions, feel free to reach out. And we look forward to further interactions.
Darren, Paula, Adam, a pleasure. There's so many more conversations I'm looking forward to having with all three of you. For all of us, all of you who joined us, if you have additional questions, reach out to us. We will be happy to get you in front of our colleagues and our panelists here. We're just over time. We will leave it there. Thank you all, and we'll chat again very soon. Keep up the great work, everyone. Thank you.
Bye-bye.
Bye-bye.